that they don't understand anything about. These are not financial people. And particularly, they have no subject matter expertise in these specific platforms and networks. And they have to be collapsed. They have to be integrated. They're going to be torn apart as their AIG gets broken up and sold off. AIG has 275 different financial platforms inside that company. Different technologies, different software, different operating systems, different... It's a huge, gigantic... like I said, it always amazed me that we could ever even get it to hang together. Most people take technology and these things, these platforms and this operation for granted. You go in and shove your ATM card in or your credit card, you expect it to work. What goes on to make it work is nothing short of a human miracle, literally, to get it to do that. And when this starts, and now as these entities start breaking up, the problem is the mechanics of this are going to get very ugly. Because number one, they're already putting a huge strain. I even got a call, I walked away from, I've been in software development now for 8 years on a new type of software. But I've been out of that business. I got a call last week. They're looking for, there's no unemployment, believe me, in the IT reintegration business. There's no unemployment in that business, that those that know how the business operates. It is frenetic in order to keep this thing, the wheels on the cart right now. It's frenetic because of the difficulty in finding the talent and the people with the ability. If anybody is looking for a career right now in IT, in large-scale IT integration, the banking and financing industry, that's the place to go, but you got to go to some place like New York or the coasts where the major money centers are and financial centers to do that. But you'll make big money right now. Like I said, I have none of the engineers that I started, as I started giving up the engineers on that side of the business, out of the consulting business, they're all working still. They're not even, I got a bunch of them in Merrill Lynch, they're not worried. They're still from the AT&T. I got engineers that stayed there for, one of them's been there since 1996, contract engineer. I told him I wasn't going to pick up his contract again. He just went to another contract consulting firm. Because I just wasn't interested in having anything to do with New York anymore in the financial industry. So by 2003, I was completely out of it. More on this mission, on trying to explain to people, talk to people, get them to understand that there's one type of economics out there that has fully, believe me, and I've studied it, like I said, for almost 18 years, fully explains exactly what's going on right now. And it's not Keynesian economics, and it's not monetarist economics, the Friedman school. It's not the real business cycle crowd, it's Austrian economics. When I realized how close on the mark they were, and realized that all the damage, and that's why what's the real bad thing here is while all this is going on in the background, in the mechanics and the systems and the way that the systems operate, and the physical technologies and the software, that's one problem. The basic problem is we have a completely deficient architecture to begin with that has to be fixed, and sitting in the center of it, that all this, most people find that incredible, that we have built this entire edifice with all this technical complexity and sophistication, and at the center of it is a failed architecture. But I'll just give you one comparison to a technical architecture to get to see why. Okay?
Could you use the black?
Can I just ask quickly though?
Okay.
The complexity of, as you described it, suggests that maybe the guys at AIG that we don't like to fire, maybe we got to keep them because are they the only guys that can figure this mess out?
No, they're not the only guys that can figure it out. And I guarantee you, anybody the problem is all this creating right now, anybody that's really good is going to leave, or has already left. 45 of them of the top 150 people have already left. Okay, and that's not going to get any better by what's going on right now with all this hoorah that's going on in Congress about the bonuses and everything else. But there are other people who can make a stab at it. The problem is not that they don't have the expertise. The problem is they don't have the innate knowledge of what's there. You got to learn that first to know. Like I said, it takes this operational assessment, this is called knowledge transfer and absorption. Usually takes me on a project, took me on a project this side about 8 months before I was willing to sit down and say, okay, I know what we're going to do for an architecture and how we're going to start attacking these problems. Well, look at the time frames that they're operating in now. Okay, look at the scale that they're operating in now. And that's the key, that is the key problem. This is what I wanted to drive home tonight. So when you're looking at and listening to what's going on here, please, you have to understand is that the people that are doing this, they're only human, number one. And they've been hit with, I don't care, you know, I really don't, the government people that are doing it, you know, most of them, not the policy directors, but the people at the working level, they're just trying to get it done. They've been handed a task that is impossible to accomplish. And this is going to accelerate, because in the next 2 years, you're going to see a lot of these banks fail, and they're going to start moving their way down. You know, fortunately for a while, the second and third tier banks, are going to be relatively safe. Like if you check into a lot of the local banks, okay, down here, these guys are somewhat immune. The little guys are actually somewhat immune because, you know, they weren't allowed to play the game in the first place up here. So actually, they're a little bit immune. They're better, much better capitalized. I mean, like Pueblo Bank of Trust, a good example was yesterday. They came out, they're at 300% of their required capitalization. Okay? Oh, and that's another thing. Don't confuse capital with money. Right? What the Fed is injecting into the system and buying up these companies through the TARP program, the Treasury, through the TARP program is not capital. These are some of the fundamental definition problems that we have that confuse people so much. Money is not capital, right? Under Austrian theory, it's very clearly explained, capital is real wealth, which is savings from real production. And that's the other thing that's going to be so bad about this is when you recognize how much of an artificial edifice has been built, okay, that's when things are really going to become apparent. We have a $14.5 trillion economy. Well, if you take it back to 1971 dollars and take it forward.
You're saying GDP?
What did they say?
Economy.
Oh, yeah, GDP, I'm sorry. Per year. GDP, right, per year. Okay. If you take it back to 1971 dollars and bring it forward, really what we have is a $2.9 trillion economy. And that's even if you believe, because those are CPI-based numbers, okay, on inflation. CPI is, currently Shadow Statistics has it sitting at around 13% and calculated as the way inflation was calculated in the 1970s. Okay, before they started statistical weighting, the three mechanisms they use now, statistical weighting, substitution, and hedonics. Hedonics being the worst offender, because it just makes crap up. $2.5 trillion of that GDP figure, right? They use hedonics on the inflation side to defactor it, or to in the deflation. Help me out here, Russ. The deflationary, what's it called? The deflator. The deflator, right? On the inflation side, they use hedonics to make the deflator, the Fed's deflator factor go down. On the GDP side, they use hedonics to make it go up. $2.5 trillion of the GDP is not based on any record of any kind of transaction whatsoever. It is totally made up. Okay? It's hedonically adjusted to come up with this figure that they published. This is why the econometric view cannot work. It is abstract. It is not concrete. It is based on the development of growth and inaccurate statistics that they then plug into a model, and it comes kind of like climatology. Okay? They have a bad model, and they have bad statistics that they're plugging into the bad model, and then say, global warming. And in this case, what? Good economy. Okay? It is my firmly held belief, based on my 15 years of direct experience in the financial industry and everything that I've researched and read since then, that we are indeed headed towards a breakup of the current global financial system.
When?
The grand restructuring, as I call it. Okay? It's virtually assured at this point. we're seeing it happen daily, but it's hard to realize on a daily basis, except in the rearview mirror. And I think it's going to start in earnest within the next 2 years. We have about 18 months to